You are listening to chartingwealth.com for Tuesday, the 27th of February, 2018. We see markets booming, the S&P 500 up for the day along with the Qs, everything. TLT, the 20-year bonds, and gold. Let's start with the S&P 500 as represented by the exchange-traded fund SPY. We see we've started the week off with a bang. We were pretty much holding the markets right there on the Heikin Ashi candlestick, somewhere around 173. Well, things moved, 273. Things smashed up. We already started the week with a rather good size green open box candle, no wick on the bottom showing movement up. Derivative oscillator still continuing to lose energy. And that again is based on the sharp week down on the 16th of February, followed by the next week up on the 23rd. And what you see happening is those down movements on the derivative oscillator reflect the market actually sliding sideways. You see a down move and a further down move as the markets themselves move up. What's happened is all of that pressure from the huge down week ending the 9th of February and the slide over has continued to cause that oscillator to just wildly move down. That's why we only use it as a confirmation oscillator. What we really look at is the price percent oscillator. We see it sliding sideways and again moving toward the red signal line, which is moving actually down toward it. So what do we see happening with the green open box candle on the S&P for the first day of the 5-day candle? Well, it's showing us again strong up movement, the market up 1.16%. As we look at that 2-day chart, we can of course again see it blasting over the high that it had reached back on the 2-day candle ending on the 16th, Friday the 16th of February. This past week it really just slid sideways, and so far this week it's booming up. Don't have a crossover yet on that 2-day chart, but does appear to be moving toward that as far as the price percent oscillator and the derivative oscillator, because again, oscillations have been up over time, not simply sliding sideways. With that 2-day chart, we do see that it does appear to be heading toward a crossing. It hasn't happened yet, so again, we don't have any confirmed crossovers yet, but we do see movement toward that. We look at the 4-hour chart. Of course, it did cross over in the afternoon all the way back on Tuesday the 13th and boomed up for a while, and then of course slid sideways starting on the afternoon of the 16th. That was the prior Friday, all the way back, and then slid sideways the following week, and then of course it is up for the day strongly on Monday the 26th. Now, that's where things are. We'll continue to monitor and watch. Maybe we'll find ourselves jumping back into an up move at some point, or this 4-hour chart could rotate over and everything could hammer down. We'll just wait and see. Remember, we're trend followers. We're not forecasters. Going to the Qs next. 1.33% up for the day. A strong day. The Qs actually now is crossing over going up. We don't call this crossover going up until the candle is completely drawn, and that will not happen until Friday. And of course, this is subject to change since the candle is first drawn. If we have a negative week, we could see the price percent oscillator rotate back over. Derivative oscillator is flat. When we look at the 2-hour chart, the 2-day chart, what do we see? It's crossing over about the same time. Now again, when you have the weekly and the 2-day crossing over at the same time, that's typically a good sign. That move's going to continue, but again, no guarantee. But we can go ahead, and we saw that last candle drawn on Friday the 23rd. At the end of this latest 2-day candle, if indeed that holds, we can move our 2-day crossover, our vertical crossover over, but we won't do that until the end of the day on Tuesday if this crossover holds. But it looking pretty strong and like it may very well do that, but we don't call it till it happens. We look at the 4-hour chart. We can see how it had been losing momentum as things had been sliding sideways over the prior week. And then, of course, it rotated over strong this past morning, heading up. So it's good to see that that market is trying its best to recover. Lastly, we will head over to our last two charts, out of stocks into the 20-year bond and gold. And of course, we see on the weekly chart that things on bonds appear to be bottoming out. And I hope you enjoy that clock ringing in the background. Rarely do we get to you this late in the day, but we have been traveling today, exhausted, but slowing down to try to bring you this, and we appreciate your patience getting this out so late. What do we see going on 20-year bonds? We see them bottoming out, it appears, because the week has started off with a green up candle. It's a small green up candle, and we'll see how that continues to develop throughout the week. Derivative oscillators losing its downward momentum. Price percent oscillator is still headed down because it had a lot of weight pushing the price percent oscillator down. All these weeks of down movement. First even inkling of a green candle we have seen in 1, 2, 3, 4, 5, 7 weeks. So amazing. Now, what we will look at as we go and see the 2-day chart, of course, it has sort of dropped to its lowest low back on Wednesday on that 2-day chart, the 2-day chart ending Wednesday the 21st, and is trying, it appears, to recover over these last, actually 3 days of movement. The last 2-day candle ending, full 2-day candle ending on the 23rd. That was on Friday, and the first half of the latest 2-day candle on Monday. See derivative oscillators losing downward momentum. Price percent oscillators headed up toward what might be a crossing. We look at the 4-hour chart, of course. It had laminated itself for about a day period on the 22nd of February, and then pulled off that, went up strongly for a day and a half. We saw on Friday and then Monday, and then in the Monday morning and then Monday afternoon, we sort of got some indecision there. So again, keep your eye on the prize. We'll continue to just wait and see just what is going on. We haven't had a crossover going up yet. We have blown through the 2-day trend line, but the red spinning top at the end of the day means indecision. So if you see a crossover going down again, might be a reason for you to consider jumping in to that 4-hour chart on a continued down play on TLT. And now we have another clock going off. Oh gosh. Okay, here we go. We're back to gold now. What is gold doing on the weekly chart? Moving sideways. Gold has been sliding sideways on this weekly chart pretty much throughout the month of February. Just sliding sideways week after week. This last week ended up with a doji, meaning lots of indecision. And so far this week, we have what appears to be at least a spinning top, meaning indecision. Looks like the price percent oscillator's headed down. The derivative oscillator's losing lots of, well, it's actually losing lots of upward momentum. Hasn't crossed over going down yet. Appears to be going that way. Again, remember the week started off up 0.25% for gold, but again, we're following the average pace with our Heiken Ashi candlesticks. We can see this latest 2-day candle is just the first day of the latest 2-day chart is again a green spinning top reflecting that up move on the 2-day chart. They do vary sometimes between the larger charts and the smaller charts on Heiken Ashi because remember it's measured differently. If you haven't taken our training on Heiken Ashi candlesticks, you need to. Something like 64,000 people. It's the most popular training we've ever provided. Please go check that out at either chartingwealth.com or our YouTube channel. And if you go to the YouTube channel, please be sure to subscribe. So we see a green spinning top. Derivative oscillator is losing downward momentum. Price percent oscillator is still headed down on gold. And then as we tune into the 4-hour chart, what do we see happening? We saw a big up, well, an up move in the morning for what it's been doing lately, pretty decent size, and then a bit of a burn off in the afternoon with a red spinning top again. Things are pretty much sliding sideways in gold. We don't have a crossover going up yet on that 4-hour chart. We'll just continue to watch derivative oscillator losing energy. Price percent oscillator is heading up, but we don't have anything to call in that regard on gold. We'll just continue to watch and see what we see. Remember, we have that schizophrenia between gold going up on the weekly chart and down on the 2-day chart. So, and our 4-hour chart is just not giving us a lot of good signs to make us trust it. So what do we do when that happens with any of our exchange traded funds? If we can't find a trade, my friends, we do not manufacture one. We remain patient, we watch, we listen, and we wait till the charts work. When they're not working, we don't use them. But they do work when things start trending. That's why we follow 4 charts, not just one. Thank you so much, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.